Many stocks today are subject to manipulation or search purely due to trends. Recently, we have seen rallies in PSU stocks, and prior to that, Adani stocks. While these blind rallies may have created paper wealth for investors, only a few managed to realize those gains. Many others held on, hoping for even greater returns in the long term, which was a bad idea. This video will guide you on how to exit such trend-driven stocks with profits, especially those that may not be suited for long-term holding.
So to go to one of the specific examples, you mentioned your thesis with Frontline was that you thought there was a liquidation value of like around $9 a share, and that you sold when you got to around there. In mentioning that you should have waited longer, right? Was your process wrong? Because you sold at what you thought was intrinsic value to a certain degree. So you mentioned humans sort of vacillate between fear and greed. How do you avoid that in your own decision making?
Yeah, I think that's a really good question because this is oh good, Arvind has muted, which is great. Because this is actually happening right now in real time. So there is Frontline 2.0, another company which just showed up on the radar, which shall go unnamed so you guys don't drive up the price. But Frontline 2.0 is basically a situation where it's trading currently, and I'm still doing the research. I'm hoping this weekend to really get my teeth into it. It seems to be trading at half of liquidation value, very similar to Frontline. All the debt is at the individual ship level, and such. So it's trading at less than half. The rates and the utilizations have kind of gone down, which is what the market's concerned with. And the price has gone down like 70% in 70-80% in the last year or two. And so clearly it's if after I do my analysis, I get comfort that something that's, let's say for argument's sake, is trading at $20 a share, and let's say it's worth 40, the liquidation value is 40. So clearly I don't need to make a decision today about when I would sell. I know that I'm going to sell at 40 or above, right? So I don't need to make that decision today. I've got time. I might have a year or two to figure that out and do more work to figure that out, which is good. But what I will not do, which I did with Frontline, is I will not sell at 90% of 40. With Frontline, I was very clear, 90% of liquidation value was out of there. I didn't want that anything more to do with it, because I think I had a juvenile understanding of the huge swings in human nature and all of that. And so now that the benevolent gods of investing are giving me another crack at the apple, I'll try not to disappoint them this time. And so I'll figure out a few things. I could do something like cut my position in half, take half the money off the table, for example. I could do that, which is I would have gotten all my principal out, if you will. If I invested, 20 million and it's gone to 40 million, I could pull 20 million out and then say, okay, now let's let humanity do whatever it wants, and we can't lose money, because that's one way I could skin it. Or another way I could skin it is to let it go a little further, which is look at what's going on with the business at the time and try to understand some more about the dynamics and see whether it's a high probability that this can, that this can go to 1.5 times liquidation value or something or not. So we don't need to make that decision today. I think if you put a gun to my head and said, make the decision today, I would probably take the approach of something along what I said, which is take the principal out, leave the rest, but leave the rest again with a taper, in the sense that the next double, take another half off, and the next, because this is not Coke. We know this is not Coke. We know this is not Moody's. We know it's going to crash and burn one day. We know that. And it may take 5 years before it crashes and burns. But we don't want to be there for 4.5 years thinking it'll go for 5 years. So if we get our double, we might do it that way.